Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start the fresh month, the Australian dollar is likely to remain on a rocky road as a great deal of risk associated with the coronavirus has swallowed up many of the bulls. On Friday, the Australian dollar posted its losses for the fifth straight week, as you can see here on the weekly chart, and registered its lowest close since October the 2nd back here, and inked in a fresh 66.82 low, right in front of the level of 66.60.70. From a technical point, we are extremely oversold, but the broader picture still remains somewhat bearish. The fact is the ADX, along with the MACD on the weeklies, still exposes further downside risk, and therefore could see a move through 66.60 and open the way back towards 64 cents. With that all being said, we should still keep on our guard. The fact is that we could see short-term squeezes, as we do have tomorrow the RBA rate decision, which is widely expected to see rates on hold, and along with that we still have to come in this week is the retail sales for Australia and also the non-farm payrolls growth, which is forecasted at 160,000 for December. That was last year, and with the average hourly earnings also forecasted at 0.3%, and while the unemployment remains steady at a 50-year low around 3.5%. The US dollar, though, did take a lot of casualties on Friday and plummeted to a low of 97.14 from a high of 97.77. This on the flip side, well, first of all, we had a bullish hammer that came through relatively strong after breaking through the level of 110.45, and now expect to see further risk to the upside in the short term to 111.15, but a cap around 111.60 to 112.10. I do anticipate, though, keeping an eye on these technicals, because if they do strengthen up further, we could see a full correction back up towards around 112.65. But I'm taking it one step at a time, and let's see how the levels are respected as we slowly climb. Now, with that being said, if we see a close under 110.65, then that would reverse all the gains and see further losses back down towards the lows of 109.55 to 85. The market is still challenging this level around 108.20.40 for dollar yen, and as the risks still remain to the downside, a break beneath there would give further exposure towards the region of 105.80 to 106.45. I do anticipate, though, any short squeezes to the upside should find resistance on the day at 108.75. Well, with the UK divorcing the EU, and along with that, with the Bank of England keeping rates on hold last week, the pound has found initial support over the last 2 days, but still respecting the topside resistance around 132.55. I do feel that is the market may reject from this level and possibly pull back towards the low side of the around 130 level, but still maintaining in this noise over the last 2 months. Gold represents further risk to the upside as it now tackles a level of 1,588. It is assessed, though, keeping an eye on this pattern because there is a little bit of divergence as this market going up, but with the risk factors still remaining high to the fact that the coronavirus has still taken its toll, with now 14,380 reported cases. Along with that, the virus has taken 304 lives. It is assessed, though, from the World Health Organization that they declared the outbreak as a global health emergency last Thursday, with most airlines now suspended all flights from the US to China, and also Australia. Qantas is also suspending 2 direct flights to the mainland of China. Looking at the technical outlook, though, we are looking still towards the 7-year highs around 1,600. Now, a break above there would give further scope to the upside of around 1,645 to 75. Do note, though, supports are quite low. First support seen at 1,570 and then 1,560. I've pulled up the weekly chart of the oil. As you can see here, we are very close to this level of 50.50. Now, we do need to see a break from the bull case and see a rally back up towards the top side that could see a move to around 51.70 to 52 to $55 a barrel. Quite a big step between the two. That being said, though, if we break 50.5, it leaves me neutral, as we could see further risk to the downside that could come into around $45, as you can see here back in November 2018. Let's see. I'm still bullish to the fact is that 50 should hold, and keeping an eye on this candle here. If it is a dragonfly or a hammer, then we could see a reversal. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to this new week.